The very final metric that we're going to look at for Coca-Cola is earnings per share, which we abbreviate to EPS. And it's calculated as the profit generated for shareholders divided by the number of shares in the company. Now, this metric is keenly watched by shareholders as it effectively tells them how much profit has been generated for each share that they own, irrespective of whether Coca-Cola has issued new shares or repurchased shares during the year. Now, a positive trend in EPS is particularly important as a forward indicator that dividends might increase. If EPS is growing steadily each year, it makes it more likely that dividends will be maintained or increased in the future. And this is particularly important for a company like Coca-Cola, which is one of the most reliable dividend-paying companies in the US. It's actually increased its dividend payment every year for the last 62 years, an impressive track record. When looking at Coca-Cola's EPS metrics, we can see they again provide two metrics, that's reported and comparable EPS. Now, as with margins, analysts place much more reliance on the comparable number, so we're looking at comparable EPS here because it gives a much better underlying performance analysis. Now, we can see that Coca-Cola's comparable EPS increased by 7% in 2024, reflecting really strong revenue growth and, of course, margin expansion. That's definitely a positive for investors, but what about the market? Did the share price rise strongly in response to this information? Well, to fully answer this question, we need to explore a different EPS data point, which isn't provided in the press release, and instead which reflects the expectations of the market. I'm referring, of course, to consensus EPS.